So, should we buy or sell Newmont gold? First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So, I have a theme called precious metals. We can see that Newmont Mining, they are a gold mining company primarily. Obviously, if they get other metals when they are mining, it's not like they're going to just throw it in the bin. 6.5% from the 52-week low, but it is the biggest loser from the 52-week highs at minus 51 if we round up. Here is their website. Newmont, responsibly managing our ESG. Yeah, they have the classic EAG stuff. Yeah. Musselwhite, mine celebrates 25 years. Yeah. So let's just go into the charts. Weekly data points, big picture. So we currently are at an historically interesting zone, I guess. If we go all the way back you see, if we draw like a bit of a messy line here, this is a place of interest for the bulls. It's not a clean support level, but it's a level where very often, if you turned bullish here, it worked out eventually. Looking at the most recent developments, we have some kind of double bottom-ish behavior around here. So there's that. You do have a double bottom pattern. Looking at the daily data points, we do see something that could become more of a rounding bottom pattern. That's also interesting. We can see if we zoom in that the 20 daily moving average, it's been a very good resistance level here in purple for the bears, relatively easy to short. As of late, it's become more difficult to short. We did close below the 20-day moving average in purple on Friday. We peaked above the green 50-day moving average before that, but the thing is that this is a situation where the bears do not feel that comfortable. Like back here, it was easy to be a bear. Now you see as a bear that yes, we closed below, but we recently were above the 50-day moving average. Maybe there's better opportunities for a short seller than this, because this from a short seller perspective, this is not what you want to see. You don't want to see the bulls just recently, playing around above another prior resistance level just after you lost the 20-day. Because that's the thing, there's a lot of psychology in the market, and the psychology is simply, investors looking at charts. And they see patterns, and some patterns are favorable for bullish or bearish positions. This is also something a bear doesn't like to see. The MACD is so close to sending a buy signal here on the weeklies. This is also something you just do not really like to see. So the MACD investors, the bulls like this, bears do not. RSI wise, we are also emerging along with PPO from a level that has favored the bulls more than the bears. On the daily data points, yeah, it's a bit more noise on the dailies here on these indicators. Accumulation distribution is pretty decent. We did pull back on Friday, but we didn't see like a massive, big volume smash, evisceration of the rally. So that's good for the bulls. So in this case, we do have a double bottom and a rounding bottom. I give the technicals a 6 here. This week has definitively been the week of double bottoms. That is simply how the charts sometimes play themselves out. So yeah, next we will go to the seasonality. Let's look at the seasonality. So to the right here, we do see that into 20-ish of October, we usually see strength, but then all of a sudden we have weakness into early December. To the left, October, November, December are pretty strong over the last 5 years. The last 10 years, we do see October mediocre, November is one of the weakest months, December is very strong. 20 years, from October to December, we do see strengthening seasonality. I give the bulls a 3 here on the seasonality. There is, there's some strength here, but it's a bit short term. And then, November is messy, December is stronger. So, but overall, it's more bullish than bearish. But the bears, they do have opportunities here. Here are some fundamentals. A number to buy from Sachs: B value, C growth, C momentum, industry rank bottom 49%, mining, but miscellaneous. So yeah, industry rank is, I don't really agree. Market cap is 34 billion US dollars. Yield, wow, 5.16%. That's a decent yield. Here is some insider. Oh, yeah. Yeah, we do have selling. Sell, 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 sell. That's not ideal. The president and CEO sold. Let's look at the consensus estimates. And here we see that 21 analysts are covering the stock. 36% price target on average. 87% is the highest target above us. The lowest price target is minus 1.41% below us. Some conflicting messages on the fundamentals. I give the bulls a 6 here. Here are some correlations. All these D's, that's dividend yield being paid out. So if you like yield, a bunch of yield, and relatively high frequency of it being paid out as well. So nice. Long term, we have 40% positive correlation with S&P 500, 86% with gold, 82% with the gold miners ETF GDX, minus 13% with the 10-year yield. Daily data points: 61% with S&P 500, 92% with the gold futures, the GC, 96% positive with GDX, then minus 61% with the 10-year yield. So what happens with the gold miners ETF? The GDX is unsurprisingly going to have a bit of an effect on a gold miners stock. This is the very big picture for GDX. We are emerging from a zone where bulls have had success buying in the past. Yeah, some strong rallies here. If we look at the candlestick here for this week, it's a bit of an inverted hammer. There are different ways to interpret this. It needs to be viewed in context. So when you had a very strong week before that, we did close higher than the previous week this week, which is bullish. The bulls didn't close higher though. Well, the bulls didn't close, in this range of the upper wick, which we would like to see. Then again, this isn't bearish either. In this context, that is. When we go here to the daily data points, we see that this green 50-day moving average, it's been a problem ever since April of 2022. So throughout this downtrend, we have been below the green 50-day. This week, the bulls, they tried to play around above it. They did pull back a bit, but this is not the stuff you like to see as a bear either, because yes, we are back below the 50-day. Then again, the bulls were very aggressive. They are doing things now to the 50-day moving average that they haven't done before. You can see here as an example, Here the bulls just freak out when they get close to the green 50-day. You see here, even on Friday, we were actually a bit higher. So we closed lower for sure. But there is a change here. Not change in the sense that the bulls are just crushing and terrifying the bears, but the bulls are doing things that bears do not like to see. And also here on the MACD, weekly MACD, very close to getting a buy signal. RSI is establishing a new higher level here. So there is something afoot here that you just don't want to see this if you are a bear. On the daily data points, we see higher levels being established on RSI. Previous rallies usually failed around the 50-ish RSI level. The recent RSI level that became the fail level was around 60. So something is afoot. Let's compare Newmont Mining with the GDX. The most interesting thing I see is RSI. So we see that these two, they have danced together on RSI, especially the low end of RSI. Here, when we touched that low end, we got a bounce, meaning Newmont outperformed a bit. Here we had a long-term outperformance from Newmont. So historically, based on pattern recognition, this is a bit of an interesting setup. Favorable, that is, for Newmont Mining. Looking at the seasonality, Newmont usually underperforms a bit into the 11-ish of October. That is right around the corner. But then it starts to outperform the GDX, meaning it makes more sense to be in Newmont than the GDX. Let's compare, let's remove this, compare the GDX with XME, the metals and mining ETF, like that. Messy, just so messy, because in this case right here, this was such an opportunity to form a very key double bottom, but that did not happen. It did not happen. We went lower, not disastrously lower. We went all the way down to this low here, back in 2014. Yeah. Let's look a bit at the seasonality here. So in red over the last 10 years, green the last 5 years, blue the last 7 years. Gold miners usually outperform the broader metals and mining ETF into the 20th of October. I give the bulls a 5 on relative performance. We have a double bottom, we have a rounding bottom as well. A score of 5 in favor of the bulls. So overall, this looks bullish. It's an interesting opportunity for Newmont Mining. The stars are aligning themselves, but you always want to have a stop loss. And in this case, the double bottom is something that must hold. We don't want that to fail. While we are on the topic of metals, this is also a metals stock, United States Steel Corporation. Recently bounced from the red 200 week moving average, being a huge deal in the past as support, but also massively a big deal as resistance. But it's currently at a support level. So that is another, stock to think of. Before making a decision about United States Steel Corporation, you of course should look at the seasonality, the fundamentals, and relative performance. All in all, we have some interesting times in the market. There are definitively big moves, but those big moves, of course, if you are on the right side of those big moves, they can open up a lot of opportunities. By having a stop loss in place when you put on a trade, it means that if you are wrong, you are not going to be wrong big. That's the huge benefit of a stop loss. The primary reason Why people do not use a stop loss, that is when they are on some kind of trading platform where you have to pay commissions. You definitively do not want to be on a platform where you have to get into commissions, because that commissions will make you, they just ruin your decision making process. So definitively commissions, they are very, very, very bad. Okay, whatever you do, of course, go to diamondarm.com to get more intel, and always have a stop loss.